Hi everyone, thanks for joining us in PwC's Budget Roundup. I hope you enjoyed listening to Minister Wong earlier today. I took away several messages from the Minister's speech. Firstly, I thought he did an excellent job in delivering the social compact in terms of obviously what is needed in Singapore to meet the future needs in the various aspects. He talked about obviously the social aspects around our aging population. What resonated with me, of course, is our potential rising healthcare costs. He also touched on education in terms of what's needed for the country to retrain itself and for us to upskill ourselves at various levels to meet future needs in terms of the pressures around, especially maybe in terms of the opportunities which can arise from environment, sustainability, and broader issues which Singapore will face. So I think you take away a couple of key messages in terms of the overall budget theme of a need there in terms of the challenges, the opportunities which lie ahead for Singapore. But then again, we need to ask that next question, how do you fund it?
Given the need for greater tax collections, the Minister has proposed adjusting the current system of taxing wealth by increasing the property tax rates for residential properties. As real estate is often a proxy for wealth, the increase in rates goes towards enhancing a progressive tax system. It is also efficient in terms of collection, since it taps on the current property tax system. We will also see an increase in personal tax collections. Currently, the top marginal tax rate for individual taxpayer in Singapore is 22% for chargeable income of more than $320,000. From year of assessment 2024, the top marginal tax rate will be increased from 22% to 24% to enhance the progressivity of personal income tax. According to the Minister, the increase in personal tax rates will provide Singapore with additional revenue of $170 million per year from the top 1.2% of taxpayers in the country. Along with the above proposals, we will see a tax on the ownership of luxury cars at a higher rate of 220% through an additional ARF tier for the portion of open market value exceeding $80,000.
So I think the burning question is it just going to stop there? Are we going to see other forms of taxation? And there was a mention of a wealth tax, but as we know that there are a lot of challenges behind such a tax, which could impact Singapore's hub as a financial center, but also equally harmful as any such new taxes also could be very difficult to administer. So it's not necessarily a prelude to such a future tax, but who knows in terms of where that possibility could lead to in terms of Singapore's needs. So with that, I'll pass over to my partner, Bin Keong, who will take you through the GST and what the changes are. So thanks again for joining us.
After 4 years of debate, the timing of the GST rate hike has finally been announced. GST rate will increase from 7 to 8% on 1st Jan 2023 and from 8 to 9% on 1st January 2024. 1st Jan 2023 will arrive sooner than you think. Hence, we have prepared 4 tips to help businesses to navigate the 2 rounds of GST rate hike. These are literally tips. T stands for Transitional Time of Supply Rule. Specific rules will be announced to help businesses to determine when a transaction should be subject to 8% or 9% GST rate. So please do add these rules to your bedtime reading. I stand for irrecoverable GST. More than 80% of businesses in Singapore are not GST registered. While a voluntary GST registration will offer these businesses the benefit of recovering GST on their expenses, you should also consider the GST compliance costs involved and the impact on your pricing before doing so. P stands for pricing strategy. Businesses should review their customers' GST registration profile and the price sensitivity of their products before deciding whether or not to pass a GST rate increase to their customers. S stands for systems and processes. Adjustments should be made to the price display, invoicing and accounting systems to take into account the GST rate increase and the transitional time of supply rules. Staff should also be trained on the implication of the GST rate hike. We hope the above tips will help you navigate the 2 rounds of GST rate hike. For more details on these tips, please visit our website. Thank you.